recording. So the recording has, I just want to make sure it's actually started. Yeah, so the recording is started. Welcome everyone, live stream. So these streams, I'm going to start the call by saying the same thing. These streams are all going to be available in Sandeep live stream. So for whatever reason, if you miss, who was this? Oh, James, you reacted. Nice. So if anyone who misses the live streams, feel free to hop in, uh, just here and try and get them. Right. So perfect. Okay. So with that being said, let's just do a pre-market sort of analysis on ES. So this is ES futures, right? Again, I'm going to go over the basics because I think it's important to go over the basics. And I'm going to go over how I find key levels because this is the most common question I get. So James, this will be revision view from yesterday, but bear with me. In fact, I'm going to leave everything on just to make it easier and quicker. So for those who've been watching me or watched any of my videos, you know that I start with the four pillars and then from there the key levels are derived. So you don't find key levels without doing the four pillars. Very important. So the four pillars look something like this. So structure, dealing range, PD raise, and fair value gap. So this is the most recent high. This is the most recent low. This is our dealing range. And so everything inside the dealing range is, well, you've got discount at the bottom and premium at the top. So discount versus premium. Yeah. Now, once you have that, you then want to look at, okay, how do you find the key levels? Or more specifically, what are today's key levels that I want to be paying attention to? So now I'm a little bit nervous because so last week Friday we had longs, right? This is what I think. Look, when it comes to finding key levels, I'll make this very simple for people. But there's two things. You're looking for a 15-minute FVG. That's the first thing. Now you can use other time frames, but I like to streamline and keep the time frame the same. So you're looking for a 15-minute fair value gap, and then you're looking for an absorption. These are the two things that you're looking for. So with that being said, now keep those two things in mind. What you want to try and understand is that Friday we actually had, yes, we had this fair value gap created here, but more importantly, we came into that same level on Friday and we actually had buyers very much in control. And so I will break down why that was. So if you remember last week, we took this long. So the long itself wasn't the funnest to hold. However, that's beside the point. What we want to understand, so if I go to, in fact, I'll try and get my order flow platforms up actually. So um, yeah, so here's the order flow platform. So if we go down now to, I just want to see how far ATAS allows me to go back. Okay, it's not letting me go back, which is fine. I'll just go here. So if we just go to our VIP, I'm just going to go back and see going to show you guys what I was looking for that day. So what you want to understand is that that was a key level because of this chart here. Right? So this key level here, so what we had over here, I'm just going to get them side by side. So what we had here, trapped sellers, price moved higher, trapped sellers, price moved higher. So these two circles, so uh, this one here, and then this one here. This is what we call, I'm going to write TS. Now TS stands for trapped sellers. These are trapped sellers because if these sellers were successful, we would have seen lower prices. We broke higher on 1, 2, and 3 occasions from this level. So this is a demand area. It's a demand area because there were trapped sellers, and so a demand area means that buyers were in control. Or more specifically, they were passive buy limit orders, right? You maybe take mental notes of this. This is a key level, not because it's a fair value gap or anything like that, because we have proven it via the footprint charts. Here, here, okay? Now, once you've done that, this is how you basically find key levels, right? That is the whole system behind it. So once you've identified that, what you want to then try and understand, if I just go back to today's price action, and even yesterday, I'll break down yesterday's price action. Good trade yesterday, just bad price action. That's not something we can control. So in other words, we had Friday, which held as demand, and then we had Thursday, yesterday, right, which held as supply. And what's interesting now is that this key level again is holding today. So I'm a little bit hesitant to take trades. Actually, I'm going to throw this out as a question. Why do you think I'm hesitant to take longs if we break above? Why do you think this is a bit meh? I actually prefer to take shorts from here. I prefer that. Now, of course, the market can do what it wants, but who can answer this question for me? James in particular. I want to see your response to this. James or anyone really, feel free to. Okay,
Okay.
we got some new people. Sean, hope you're well. Uh, Tell me why I am reluctant to take longs from here, because we spoke about this in the class the other day, right? So this is a key level because of what I've been through, because of what I've just
Yep.
been through. Why do you think I'm less inclined to take longs from here?
Because we have our weekly open that is below, and we're longs, and it's also because we are in premium. Um,
So
so the move has already really happened,
so
and so we would just be getting the end of the move.
this is the weekly opening price here.
Yeah.
So we are above the weekly opening price. So we ideally want to look for shorts. Is that what you're saying?
Yes, and you're also above the 50%.
You're not actually above the 50%. You are right in the sense of we are right at the 50%. Do you see that?
Oh, yeah, and you don't want to trade
You
it
don't want to you don't want
at
to
the
trade there.
50%.
Yeah, yeah, because
Okay.
you don't want to trade there basically. So I'm more inclined to take now when I say I'm more inclined, I'll do whatever the market tells me to do. I'm not going to sit here and predict candles and force my worldview on the market. That's incorrect. What you want to do is you want to do this, right? So this is what a pre-market game plan looks like. So this is the reason I want to do these sessions, right? So having a pre-market game plan tells you everything you need to know. So a couple of things. So we've done our structure and we understand are we in bullish or bearish structure overall? So we're in bearish structure because we got low, low, right? So we're in bearish structure. Can we see that? Hopefully we all understand that bit. Now, by definition, we would also have a bearish dealing range. So our dealing range is bearish too. Now I get questions about the dealing range, but the dealing range is nothing more than this entire section here. This is the dealing range right here. So anything in between is a dealing range. Anything outside is not a dealing range. Okay? So we need our structure, we need our dealing range. We then need to understand where our key levels are. So there are multiple key levels. I mean, there's also one just off the top of my head. This is obviously a naked chart. There's also a key level here as well. So 15-minute fair value gap, and it's the same concept as this key level down here. We're drawing these levels because they've had reactions, right? Because the order flow has confirmed their reactions. So your pre-market game plan needs to look something like this, right? And also, because we're in the discount, I would also want to be interested in this area, which is where I was trying to target yesterday. So yesterday, it was a very simple move. I was trying to target here down to here. My goodness, did we have a difficult time in this chop, but that's not our fault. That's not our fault, right? We have our levels, we execute accordingly. It doesn't really matter what the outcome will be, if that makes sense. I know it sounds weird. We can't control the outcome, we can only control our plan and inputs. Something to pay attention to. Now, the third thing we have is we have our levels, and this is what's very important. This is why I always bang on about levels, 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 levels. You need levels. So from here we have one, two, three. So break below two, we target one. Break above two, target three, roughly. And the fourth thing we want to look at, James mentioned this, is the weekly opening price. Weekly opening price. And so how do we use the weekly opening price? So the weekly opening price is used it's kind of like a magnet. I want traders to kind of understand it's a magnet. So if I get the weekly opening price up, we can see this faint line. That's the weekly opening price. So that was Sunday at, well, my time 10 p.m. or 16 o'clock or 4 p.m. Eastern. So basically, what's really going on? I'll try and break down the weekly opening price to traders, right? So once you have a key level, right, the best shorts will come above the weekly opening price. So you can see here we have shorts above the weekly opening price, and even over here, yesterday's idea was basically taking shorts because we were above this weekly opening price, this line here. So I was just trying to target here to here. That was the idea. So James asked a good question. Why were we shorting in discount? Well, because we were above the weekly opening price. Okay. So going into this session, which is going to start in 8 minutes or something, or 7 minutes, here's what we have, right? So again, we're not trying to predict candles. We're simply trying to react to what the levels do. So again, we have level one, level two, level three. Break above two, we target three. Break below two, we target one. It's as simple as that. Hopefully that makes a bit more sense. Does anyone have any sort of question on what we've been through there? If not, hopefully I did a good job of explaining it.
Yeah, you did. That was great. Thank you.
Okay, so I'm going to stop the recording